macro market trends, stock selection, ETFs, options, just some of the topics covered in Tactical Trading. Well, when last we met with our senior stock strategist, Kevin Cook, he showed us some very interesting things on a big chart of the S&P 500 index. And this week, I'm guessing he may want to do the same thing. And the reason why, Kevin, is because last time we talked, you were talking about that 1110 extreme value area, as you called it, and why the market would gravitate back up to 1250 level on the S&P. So you probably want to revisit those themes, I'm guessing.
Definitely.
Since we tested the lows and are trying to make our way back up. As we speak, we're at the 1166 trading level on the S&P 500. But first, I need to ask you, since you're a stock picker, one of our top stock pickers here, why so much focus on the S&P 500?
A good point. Yeah, Zacks looks at 4,400 stocks, and we're supposed to beat the market by picking the best of those. Two reasons. One, individual stocks will tend to follow the broad market. So whatever the averages are doing, so if you're in a strong bull market, your strongest stocks are going to be the leaders of that. If you're headed down, maybe headed into a bear market, even your strong stocks with good earnings are going to be going that direction too. So that's why you want to look at the broad market most of the time. Right now, though, is especially pivotal. And I talked about that 1100 area on the S&P. The stock managers are pricing in a recession. Now we need to figure out which recession. Is it the mild recession where maybe GDP dips below zero and we bump back up, or is it a severe recession? Until we know, that's why I called 1100 as an extreme value area, because until we get the evidence really that this is going to be a worse recession, managers will buy there, and that's clearly what they did. We tested those lows, 1100 to 1120, and now we're rallying.
So for you, the S&P 500 index is the best representation of the broad market.
Yeah, I really don't look at the Dow. Yeah.
Okay.
I want to look at 500 stocks, not just 30.
And I ask that because it's different for everybody. So what type of evidence are you looking for to confirm a recession here, and what do you think the market's going to do in the meantime?
Okay. The biggest thing would be numbers about growth. And right now, we're going to get a second look at GDP this week.
Yeah.
But that came in at 1.3% for the second quarter. It might tick lower. No real surprises there, I don't think. What we're really looking forward is what is third quarter GDP going to look like through the lens of, say, manufacturing data. And we got an awful Philly Fed report last week, which some people would say almost predicts that we're going to have a severe recession. That remains to be seen. So we're waiting for more data. This week we got a great durables number. Stocks are up because durable orders came in, so strong.
Yeah.
So that kind of thing. The other thing I'm looking at is earnings estimate revisions, EER. That's our bread and butter here at Zacks. We're taking hundreds of analysts from Wall Street and compiling their future growth estimates for individual companies and telling us which are the strongest stocks to buy, which stocks have earnings momentum to the positive. If earnings are topping and they're going to start to roll over, we haven't seen those downward estimate revisions yet. They could start to come after Labor Day, I think. Analysts are a little bit slow to move. This is a sort of a big ship. They don't want to jump too soon. They want to, have some forward visibility and then say, okay, yeah, we don't think company XYZ is going to earn $1.50. We think they're only going to earn $1.30 this year. So once we start to get those downward estimate revisions, we'll have a better idea of how bad this recession could be.
Okay, that second pass of the second quarter GDP data that you referred to comes out on Friday of this week. Also on Friday of this week, Big Ben Bernanke talks at Jackson Hole, Wyoming. Why they named that town that, or why they're holding that there it's a weird town. But anyway, talks there every year. The Fed chief talks there every year. So everybody is kind of hoping, I don't even know if anticipating is a good word, but at least hoping that he has something positive to say with regard to helping to stimulate this economy.
Right. And I don't think that that's what this rally is about. Okay. I don't think that this rally, this counter-trend rally where we may head back up to 1250, I don't think it lives or dies by what Ben Bernanke says at Jackson Hole on Friday.
Okay.
Right? And I think the market pretty much took it out of his hands in August. When we got those GDP numbers, they saw I don't think that the Fed can do anything more for us, was probably the conclusion of most money managers. The Fed can't help us anymore, and maybe the administration can with fiscal policy stimulus, and Ben Bernanke would be a fan of that. But still, that's still more pushing on a string, and so really, fund managers are just going to look at the hard evidence and not wait for Uncle Ben or any kind of stimulus to bail them out.
Yeah.
Let me just show the chart here of the S&P. This area, 1250, that we could gravitate back up to. Last time we talked about the death cross. There it is, 50 and 200-day moving averages crossing negative. And that trend line I have drawn is attaching the March lows of 1250 to the June lows of 1260. That's what we crashed through. We may gravitate back up towards there. The 50-day moving average now about 1265. And like a vacuum, the market could get drawn up there. Now, everyone's talking about S&P 1250. So that might mean sellers are going to pile in before that. And we'll see. If we get a nice strong move above, say, 1210 on the S&P, there's going to be sellers between there and 1250.
All right. We will look forward to see what happens and maybe compare notes again next time you happen to stop by.
All right, Terry.
Parts.
Thanks for having me.
He's always interesting. He's Kevin Cook. He's our senior stock strategist at Zacks.com, and you can always read what he says on our homepage. You can link to it off of our homepage anyway because his picture is there. You scroll down till you get to his picture, and the headline right next to it is generally a live link to his most recent column, and there is where you get his most recent thoughts on a variety of interesting issues and trends. You can also follow him on Twitter at kevinbcook.com. Just at Kevin B. Cook.
Yeah.
They don't do the .com. Okay, you can tell I'm a Twitter expert here. With Kevin, I'm Terry Ruffalo.